Episode number 167.
Right. So let's say there's 4 horses on a track: a stock horse, a fixed income horse, commodity horse, and a real estate horse. If you know which one is the lead horse, your job is done and you won.
Welcome to the Be Real Show with Travis Too Tall and Huff, where we talk about life, dreams, social media, and business.
Well, hello and welcome to the Be Real Show with Travis Too Tall and Huff. Folks, I'm fired up today because we're about to make you some money and we're about to bring you that fearless wealth with my man, RC Peck. RC, are you ready to be real?
Let's do it.
Let's do this. RC Peck, my man, is a CFP and he sits at the intersection of money and human behavior. And for over 20 years, he's actually helped people hear what their money problems are. And, everyone's got a struggle. And his struggle is actually with dyslexia, watching his parents' life savings get embezzled. And his background on Asian studies taught him quickly to be questioning and questionable. My man, today is a great day, right? To be invested in the market, as well as also just to know where your money's at right now, my man, right?
I mean, the thing is, we are always invested at all times. Right. So the moment you get paid $1 to do something, that dollar is a unit of wealth.
Right.
So, the thing most people don't realize is they start out as investors before they start out as earners.
Right. Yeah. And the key is that keeping on those dollars, because as much as you make, you can spend it. Right. I mean, look at some of the most famous athletes and business people and also celebrities in the world. They go broke. Some of them do.
Look, how to keep it and grow it is not a popular subject. Most subjects are around how to make it.
So what made you most passionate about this industry 20 years ago when you started figuring out, obviously you said you had a situation where your parents got their savings embezzled, which is horrible. What gave you the inspiration? Was it that propelled you to say, hey, you know what? I can't let this happen to me in my future?
I mean, part of it was just seeing what happened to my parents, and part of it was growing up. We grew up working class, but my parents were smart enough to move us to a really wealthy town. So part of it was just seeing how my parents worked. My mom worked retail, my dad was outside sales, and seeing other parents not work more but have a lot more. So I was just fascinated by this whole idea and how someone can be home for dinner every night and be in a 10,000 square foot house, and someone could be gone 8 out of 10 nights working and, rent.
Right. Like, what's the difference?
Yeah. Like, what are they doing? How is that possible? Like,
right.
What is this whole thing? What is this thing?
Right. It's fascinating, really. Compound interest is fascinating.
Well, and what is even more, I agree. And what's even more fascinating is how, in the world of growing it, there's no extra credit for effort or hard work. And compound interest is one of those examples where you don't really need to do that much to have a pretty amazing outcome.
Hey, just be consistent, right? I think that's the hardest thing for people to do with their investments is, someone 20 years from today, if they had not started putting even $500 into the market, into like a Roth IRA or something, right? I mean, they could just get it going and do the max that they can get on a Roth IRA. And, 20 years from now, it could be something special, versus the person 20 years from today, they're going to be like, I never saved, man. I never had the money. Yeah. That's the only thing I hear. I never had the money.
Yeah. I mean, that's never true.
Not true. Yeah.
It's never true. I mean, there are absolutely situations where I'm going to speak improperly. Every money that came into their life, maybe they had to put right back out.
Right.
But to say they never had money is actually not correct.
Totally. It's like someone saying they don't have enough time.
Same difference.
Same thing. So why is my money trying to tell me, and what is it trying to tell me? What is my money saying to me right now? Why are people not able to hear what money's trying to tell them?
God, there's so many reasons for that. But first of all, I'm kind of a heretic. Even though I'm in the industry and I'm a CFP and a registered investment advisor, I have a lot of contempt for this big box advisor world.
Mm-hmm.
So I would say one of the first reasons people don't even know how to listen to their money is they are drowning in noise and confusion and jargon and overwhelm and angst and BS and keep going.
So there's too many options.
It's not even too many options. I mean, yes, but there is this noise blaring in their brain. And how the heck are they going to listen to the voice of their money when they're literally drowning in jargon and terms and misrepresentations and confusion? It's very difficult to.
Yeah, you got people trying to sell you some annuities or sell you something that's like they get huge commissions on. And it may be right for certain people, but I think some people just do it for the commission.
Yeah, I mean, annuities, the joke in the industry is no one's ever purchased annuity. They've only been sold one.
Right. Yeah, it wasn't your idea. Wasn't your idea. It's very interesting. So today, if someone can look at their finances, they look at their accounts, they look at stuff and they say, why is my wealth not fearless? Why am I not in that zone? And why am I not powerfully, like you said, powerfully simply investing my money? Where's the first step? What do they do first?
The absolute first step. I mean, it's not an easy first step, but it is the first step. And the first step is wanting to connect or realizing you have to connect with your money, right? And that could be a piece of paper and a pencil and writing down what you spent that month.
Yes.
Right? But it's not about lattes or going out. It's first to connect with your money. And most people don't want to connect with their money. And we know this. Like, if you don't connect with something, it's not going to work. And people don't know how to connect with their money. So it's not a trivial, the first step, I guess, even before that, is knowing that there must be a better way.
So having the confidence that there is a better solution than I'm doing now.
Yeah, I mean, and I don't mean to be the difficult guest, but like, even as I think about that, they could end up going to a big box advisor. I mean, at least they would get their money invested.
Right.
But I mean, there's so many layers to this. And, be the skeptical scientist. Scientists ask questions, doctors want answers. So I guess be the scientist, be the one with the questions, with more questions, with even more questions, not to be a difficult client. But again, be the scientist and don't be the one who's like, I got some answers.
Mm-hmm.
Oh, there are some answers. Like, are those answers even the right answers?
Right. Yeah. You go on any finance websites, they're all saying conflicting stuff. They're all talking their own books.
Well, they're all talking, to me, they all look the same.
Yeah. Right.
They're all some shade of blue. They all say they're different, and they all say they're going to teach you how to diversify.
Right.
And that's the problem. Diversification stopped working 2 decades ago. But if you go on 30 big box advisor sites and they all talk about their amazing diversification strategies, you don't even know to question whether you should even be diversified.
Mm-hmm.
It's tough.
Yeah, because if you were to listen to like one of the obviously most wise men on earth for investing, Warren Buffett, he'd say just invest in S&P.
Yeah, which by the way it both is and isn't diversified. It is in the sense that there's 505 stocks in the S&P 500.
Right.
So in that sense, you are spreading your money out. Basically, you're buying USA Inc.
Right.
And it isn't, because you're not owning a well-diversified portfolio of ETFs with large cap, small cap, deep value, international, domestic,
right,
blah, 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 jargon. You're buying one thing.
Right. But for the common person, most of them, instead of having nothing, they should at least be getting into something. Because I think that the negative side that comes out of investing is all these kids that are 17 years old that are millionaires off day trading, supposedly. And these people see this stuff. Even my clients that are in their 50s and older, they see this stuff and then they lose money day trading, thinking that's investing.
Yeah, day trading is a job.
Yeah, it's a job. You have to know what's up.
Yeah, it could pay well, but the behavior of investing and the behavior of a job, like you say day trading and they hear the word trading and think investing. Day trading is a job. And maybe these 17-year-olds have figured out this job well. But first of all, and whether they keep their money until they're 27, statistics say they won't.
Right.
because the keeping it and the growing it is very different than the getting it.
Yeah. I find for me, it's just small amounts weekly. Just keep compiling, keep investing, keep active, keep doing what you're doing every week. Don't make it like some big thing you got to do like once a month. You got to cut a big check to your E-Trade or to your whatever your provider is.
Yeah, it's interesting. Most humans, like you said, they feel I'm going to wait until I have money. I'm going to wait.
Right.
I'm going to wait until they've been somehow hypnotized to believe that investing starts somewhere in the future. And like I said before, we're all investors first before we're earners. Like everyone probably got $1 for their birthday at one point.
Right.
That's a unit of wealth. That means you're fully invested in the US dollar with that $1. We start off investors.
Right. Yeah. If you got your money in your bank right now, you're investors in the US dollar.
Yeah. Which we know long-term is a really bad investment.
It really is. Yeah, it can be. I mean, I think I was telling someone, I think the only thing that, having cash provides is when it goes into bad times. Obviously you see people like that when in the 2009 crash, but having too much cash, as we know, is doesn't make any sense, right?
Yeah, I find most people are in cash because they haven't really understood how the markets work.
Mm-hmm.
And maybe their big box advisor in 2008 had they been a well-diversified portfolio that took a 50% hit.
Yeah.
And so it makes sense they got scared and said, look, I got to put myself, they don't think of it that way. They say they step aside or they took it out, right. But they put it in this asset that you can buy for $1 and sell for $1.
Right.
So at least they don't have that capital loss.
Has no earnings, has no dividends, has no growth.
Well, again, the dollar is up against something called, the loss of purchasing power.
Right.
So if someone went into US dollars in 2009,
right,
and now we are here a decade later, almost every part of the country, maybe not every part of the world, that same dollar is absolutely buying significantly less.
Absolutely.
Except maybe like flat panel TVs from Costco.
Yeah, except for like technology is basically the only one category. Like technology products tend to go down over time.
Yeah. So technology, their money would buy more.
Right.
But, it's not going to increase the quality of your life having a faster laptop.
Yeah. And you're always going to be able to buy something on sale. My dad, who's a really good, he's a great investor, to be honest. He's at the Berkshire Hathaway meetings right now, he's what they call a value investor. And you know what, guys? He could afford any kind of groceries he does, but on Sundays, he goes to the grocery store to find the deals. And he goes and finds his weekly deals, not because he has to, but it's just because he wants to. So there's always going to be something on sale, a piece of meat that's, going bad, and they're going to throw it away, or they're going to give it to you for 10 cents on the dollar. You know what I mean? There's always going to be a deal. That's not a reason to stop being invested, though. A lot of people like fear that. It's like, well, pay yourself first, is a really good mindset. So what is right now? What is people's biggest struggle with investing that you see?
They are overwhelmed. They are full of angst. They are stressed.
Credit. A lot of people using credit cards. They have.
It depends what level of income you're at. Right. Not every, but almost every level until you get to the top 0.1%.
Right.
There's a general angst about the market because they haven't been taught in a way that they can verify they're safe.
Mm.
So by default, their brains have to be in this kind of this low level, anxious level, which is unnecessary. It's because, they got put into certain ideas of I'm conservative or I'm moderate or I'm aggressive or I'm this. Like, what do those even mean?
Right.
Right.
Yeah, these are real companies. You could have been, you got to buy companies you like, right? Companies you believe in.
Well, you got to buy companies that are going up in price.
And up in price, too. That's a good point.
So, I don't care about the companies I buy. I care about the company's stock price.
Right.
And I know that's an unpopular thing, but...
Well, that's the truth.
If I'm going to, let's say, be looking at the 100 largest companies in the U.S., and let's just say Walmart was the strongest price chart, meaning it was going up the best.
Right.
Like, okay, well, what's best for my money is being in that company's stock.
Yep.
And you can say whether that's a good company or how they treat their employees or whatnot, but that's a separate conversation, right? And I think a lot of times people get confused between the company itself and the company's stock price.
Right.
And
Yeah. Oh, yeah. Today, especially with all the algorithms trading and things like that, folks. So, I mean, we are in a different world with all these robo trades and all this high frequency trading stuff. I mean, the crazy thing is like on just a news story, things go up and down. It has no relevance to the business itself. So do you believe in like Warren Buffett, where he'd say, if you want to buy a company that if the stock market closed down tomorrow, you're still owning that company, 10 years from now?
it depends what you want to achieve.
Right.
Right. Because
everyone's got different goals.
Well, first of all, I mean, absolutely best investor over the last 50 years.
Right.
And the problem with, so I grew up in the 80s. The problem with getting tips from Michael Jordan or quotes about basketball from Michael Jordan or his equivalent in any of the, different industries of the world is, but what do you do with it? Right. So if Warren Buffett says, get a punch card and buy 20, when 20 punches are in that punch card, your investing is done for life. Well, which is something he used to say. He doesn't say it anymore.
Right.
The thing is, he has sold more companies than he's purchased.
Yeah.
And that's not, I'm not throwing him under the bus, but like hearing sayings or quotes, like they kind of become these platitudes that, buy when there's blood on the streets.
Yeah.
Okay.
Sounds good, but it's not necessarily practical for everybody. It's practical if you're a billionaire.
Or maybe not even. I mean, he is one of the few billionaires that became a billionaire from buying publicly traded companies. If you look at the 1,000 richest people in this country, it's not from investing. It's from starting businesses.
Absolutely.
Right? I mean, just look at the 2 richest people in this country who, by the way, both live within 5 miles of my house.
Right.
They got now they're over 100 billion from starting companies.
Crazy. Yeah, and Berkshire's buying Amazon I heard saw that yesterday. Berkshire's buying stock in Amazon.
So it's hard. It's such a difficult thing to really understand how you question the experts, especially if they're all saying the same thing but have different addresses, different logos, and different business cards.
Right.
But they're all kind of saying the same thing. It's hard to know how to question that.
So for you, how do you suggest customers, filter out some of that hype and some of that noise that's out there? What's the best strategy you think that they can start with?
The absolute first thing they could do is they have to be able to see what they're buying. And I mean, they have to visually see a price chart.
Gotcha.
Right? If someone says like, oh man, RC, you got to get into GE. GE's doing a turnaround, blah, blah, blah. It's like, great, show me a 4-year price chart of that. I need to see that. And there's only 3 types of investments on this planet. Investments that are trending up and to the right, that your brain can clearly see, yep, that's going up and to the right. Investments that are clearly trending down and to the right, and your brain knows. And then the third type is, I don't know what that is. Wait, I'm going to start with something other than up and to the right or down and to the right. Maybe like, well, it used to do this and that. So the answer to the question is to visually see it in a price chart that cuts through the noise.
Right. Yeah, because in 4 years, you'll see that stock's gone down.
You'll know its direction. Something in motion stays in motion until something of equal and opposite force pushes back against it.
Got you. They'd have to have a hell of a rally to come back.
Well, think of it this way. You're in town. You have 3 choices. Let's say a better life is north of town. Okay, all things being equal. There's a bus that says heading north, and it's actually heading north. There's a bus that says north, and it's just circling the town. And there's a bus that says north, and it's heading south out of town. So all 3 of them say north. One's heading south, one's touring the town, and one's actually going north. So all things being equal, which one do you want to be on?
Yeah. The one that's trending.
The one that's going and doing what you already want it to do.
Right. So don't look past the chart really at the end of the day. Pull a 4-year chart or a max chart and see what the thing's done.
We are so biased. Humans are so biased that the more we learn about a company, and there's deep science behind this, not company specific, but literally anything, a coffee mug, the more we're going to value it. So you want to know some information about it. And once you have kind of the minimum information, it does not benefit you to learn more.
So just stay at that and then just keep doing it.
Yeah, and go to therapy so you can keep the keep the noise machines at bay.
Right. Yeah, I mean, the way to avoid it is just to not watch CNBC and watch these shows. I mean, I sometimes like to watch it, but that's just because I am an investor and I do like investing. But, at the end of the day, it's everyone's got to start somewhere if you haven't done anything, and then even those, sometimes I think people that are, have made a lot of money, they don't know what to do with the money. It is sitting in a lot of bank accounts right now.
And they're fully invested in the US dollar. So
right.
If there's anything I leave people with is you are always invested at all times. And we start off as investors. We are all investors.
All right.
There's no setting your money aside. You have your money in the US dollar for the last 10 years. Your life is poorer because of that.
Right. And if you had it in the market in the last 10 years, the sucker's been rallying, baby.
Yeah, it has been going up. Yes.
So when someone comes to you, do you also look at alternative types of investments? Are you primarily looking at the markets like, international, US, different sizes, or do you also look at other things like peer-to-peer loans, cryptocurrency, real estate?
Yeah, so there's only 4 assets on the planet. There's stocks, there's fixed income, which is cash and bonds. Mm-hmm. There's commodities, and there's real estate. That's it. There's only 4 things.
Right.
And if you know the one of those 4 things that is beating the other 3, right? So let's say there's 4 horses on a track: a stock horse, a fixed income horse, commodity horse, and a real estate horse. If you know which one is the lead horse, your job is done and you won.
True.
So, a cryptocurrency is not a new asset.
Right. So it's a commodity.
It's either a commodity, or it's a currency, or it's a technology, or it's a utility, or it could be a couple, like gold. Right. Some people think gold's a commodity. Some people think gold's a currency. They're both right.
Right.
But the point is that there's only 4 places on the planet to put your money. And of the 4, the one that has the best long-term track record is stocks.
Absolutely. So what platform do you guys use with your market? Which ones you guys clear with?
My custodian is Schwab.
Schwab, okay.
So, I mean, if I manage someone's money, their money is at Schwab.
Got you.
I have a training course that I've had for 16 years.
Oh, wow.
And I simply let people know, being at a TD Ameritrade or an E-Trade or a Schwab, that's all you really need. There's no reason to spend any more than what those companies, and they're not even discount brokerages anymore. I mean, they're full service.
Right.
But they lead the market in just forward thinking.
Right. And what about Robinhood? How are your thoughts on that?
It depends how much money you have. So at Schwab, even Fidelity, probably even TD Ameritrade, you can now buy index funds that have 0 trading fees.
Wow.
Gotcha. Like Schwab has Schwab ETFs that you can buy without a trading fee. And Schwab now has ETFs that have a 0 expense ratio. So
wow.
Look, the fee war was won in 1977 when Charles Schwab started trades for $79.95. Obviously today they've gone to 0.
Right.
But back in 77, that's really when the war was won, and now fees are 0. So the fee war is over, and fees were never really the thing that took down the temple on top of people. There are still a lot of fees out there that are unnecessary. Most are invisible to people. But most of the pain people feel in their lives is not from whether they choose Robinhood or Schwab. It's from 20-year-old, 40-year-old information. It's not understanding the foibles and the downsides of being a human and growing your money. That's where the real expense comes from. And now that fees are zero, maybe the attention will get moved to what actually causes the pain.
Right. Well, it's consumerism, right? I mean, if you're not investing, you're spending it or gambling it away or something.
I mean, part of it is not transferring it to your future, but even if you start with that, look, I've been doing portfolio reviews for probably 20 years, and I've yet to meet a portfolio that have not found a 3% annual leak, a 2 to 3% annual leak in their portfolio.
Wow.
That they were not aware of. And I'm not talking fees and mutual funds or ETFs, but consistent annual 2 to 3% leaks in their portfolio that they were unaware of. And these are not $10 portfolios. These are $1 million or $10 million portfolios.
Right. Big money if it's 2, 3%. Yeah.
These are people in the top 1 and 2% of income where across the board for 2 decades, I sit down, I show them where their leaks are, and I do it visually, and they go, oh my gosh.
Wow.
I knew there was a problem. I just never knew what it was.
Well, I've always heard too that it's best to go with an RIA, right? That's a registered investment advisor. I've heard there's not as many people that are RIAs as the other kind of investment categories. Is that correct?
I mean, I'm an RIA too.
Right. Yeah. Or a CFP is better, even better than that.
Yeah, I mean, I'm a CFP too. I mean, it's probably, you probably have a better likelihood of not being hurt. But the thing is, I kind of hold the whole industry. I mean, look, I get to make fun of the industry because I am an RIA and a CFP, right? Like, if I was ever to be a stand-up comedian, I can make fun of white people in Illinois.
Right.
Because that's where I grew up. I can make fun of all Illinoisans.
Yep.
And so, all things being equal, almost everyone is going to put you in a very similar type of portfolio. Their logos and addresses and phone numbers will be different, but the likelihood is whether you're with one big box or another big box, they're all kind of big box.
Mm-hmm. So work with someone like yourself that actually cares about their portfolio and is going to take care of them. Find that little leak and fix it. Well,
I mean, I'd say it anyway, because I don't want to have it be like, don't work with them, work with me.
Well, yeah, no.
I think the point is like, here are 3 things to think about. If you talk to someone and they put you at the center of your investing by asking you your age and your self-described risk tolerance, I think that's a problem. And just by the way, every advisor is going to start with, hey, what's your age? And fill out these questions. Oh, you're moderate. Okay, are you aggressive or are you moderate or are you conservative? And to me, that's a clear sign that you're working with a conventional thinker.
All right.
Which is almost all of them. I've never come across someone who doesn't lead with that.
Right.
And the problem is the stock market or the asset world, they don't care what year you were born, and they don't care how you answered those 30 questions. So even though everything that's happened to your money, you've seen it through the lens of your eyes and you've been at the center of it, you actually want to put these 4 assets at the center of your investment universe. Really understand of those 4, which one is in the absolute front of the other 3, and which one is in what's called the relative front. So which one has the performance and is also going higher in absolute terms. And so it's so difficult to turn the noise off. But when someone leads with age and self-described risk tolerance, that's usually a sign you're going to get a strategy that was built in the 70s.
Right. They're just going to stick with the same thing. Because it somewhat still works. It's still, like you said, it still somewhat works. It's better than zero, but it's not.
It's gonna work. You're gonna get out there. You're gonna put the sail in the boat, and the boat's gonna move.
Right.
All right.
It's not going to get you around the world.
Well, you just have holes in the hull of your boat.
Slowly leaking. I love your insight, my man. I'm excited, man. I'm excited about the future for financing. I think anyone that's not invested is obviously missing the boat, and it's not hard. You just go find, like you said, a stock chart, find some companies that one of the best ways I always found to tell people if they hadn't known a lot, because I don't know a ton, but I obviously have been investing for about 20 years. And since I was a kid, I've been investing in a little Roth IRA and cash account now. And the point is that for a lot of these people it's find companies that you're already spending money with. Right? I mean, if you're already buying gas at Chevron every week and you're buying money at AT&T and you're spending money on your Comcast bill and you're spending, just buy the companies that you give money to.
Yeah, I go back to what Warren Buffett said, just buy the index and be done with it.
Yeah.
You're betting on the future of the United States. It's been a pretty good bet the last 243 years.
What are your thoughts on like the VT and like things like that, the Vanguard Total World?
I think it's a bad idea.
Really?
Yeah. There is very clear scientific backed evidence that you do not want to be diversified between U.S. domestic and international. It is a way to slow down the growth of your money. So if you want to slow down the growth of your money, make sure you're always allocated to international stocks.
Gotcha.
In the U.S. Yeah. So these chestnuts that we all grew up with, changed. And we didn't know it. They changed decades ago, but we now have the proof to actually show, see, this is how things run in cycles. You've got to learn how to question the questions that you don't even know question the answers you don't even know to question, but be more of a scientist.
I like that. Be a scientist. Well, we're about to take you, my man, to our top 10. Are you ready?
Let's do it.
Let's do this. Apple or Android?
Apple.
Netflix or YouTube?
Oh, YouTube.
Instagram or Twitter?
I don't use either.
Chicken, steak, or fish?
Fish is better.
Laptop or iPhone?
Ooh, iPhone.
Spotify or Pandora?
YouTube Music.
Oh, there you go. Movies or video games?
Absolutely movies.
Reading books or listening to books?
I have dyslexia. Listening.
Stocks or crypto? I think we already know the answer on this one, but what's proven itself over time, baby?
Go with probability. Stocks.
Oceans or lakes?
Mountain lakes.
Nice. When you wake up in the morning, you're getting yourself ready for the day, you're getting your mindset ready. Why do you love being you?
I've done a lot of internal work on myself the last 2 decades, and I'm a father of 2. I get up about 5 a.m.
Nice.
And one of the first things I do every morning, I didn't come by it easily, but I say out loud how lucky I am to be the father of these 2 kids.
Oh, that's awesome, dude. I'm a new dad, 92-day-old girl. So I can't, it's amazing what being a father is. I mean, it's just, if you aren't a father, it's not easy to just say, oh, go become a father, because obviously there's a process to that, but it's such a powerful, and also I feel it's a very humbling role on this earth, to be a father.
It's the first time I was ever introduced to a real loss.
Right. Oh yeah. True.
Like as soon as I had my first, and I always wanted 2 or 3 kids, but I remember having my first, I remember going, this is too fragile.
Right.
I have to have another.
Right.
But it was the first time ever being introduced to real loss.
Yeah.
Because it's like, oh my gosh, and it's affable, meaning there aren't words that you can't put words to parenthood or fatherhood. You can use some words like difficult or humbling or insight or amazing, but they all fall country miles short of what that experience is to just be like, oh my gosh. Like one thing for me to be in pain, whether it's physical or emotional, right. It's another to see your 8-year-old or 11-year-old be in emotional pain. And you're like, oh, this is real pain.
Yeah.
Because you can hold the container and you can love and you can use the correct words, but ultimately they're going to have to figure it out. And that is something that is too much for, I think, a lot of people.
Yeah, it's true. It's very, very, very true, actually. Is there a skill right now you're trying to master? Is there something you're working on right now to get better at or become more wiser about?
So I'm the answer is always. There's three, and I always do one for each. So there's health, wealth, and self. So I will tell you my health one. So I have an 8 and 11-year-old, and we go figure skating every Wednesday night. Now I'm 48.
Wow,
so
good job.
Say that the best thing a man could do is learn an exercise that has him age well.
Yes,
right? It's not about 100 push-ups in a minute. It's about what are the best practices for aging well? Mobility, stability, flexibility. And so figure skating with my 2 kids every day is my new kind of physical skill.
That's cool.
And then for, let's see, we got health. So that the health is giving up sugar.
Got you.
So that's my thing.
That's a tough one.
So I've given it up again for, I think, my 3rd or 4th time.
It's a tough one, man.
It is a tough one. And then my last one, which is the self, which is what am I doing, in regards to my relationships. And the thing that I'm working on the most with my relationships is my relationship with myself and being kind to me, which is exceptionally difficult for a human to be kind to themselves.
Oh, I know. They say we're our biggest critic, basically. We're with each other all the time, obviously, and we, it's one thing that I wish if we could just wave a magic wand is that we would all believe in ourselves more, and also especially with like the fitness and health goals. I know a lot of people are get disheartened, because America's overweight. Let's just be real. Most of the people are obese and they all want to get fit. But the thing is, they don't tell themselves, I'm happy where I'm at, but I want to be better, and work at it. You can't just overnight get fit, you got to work at it, but you got to accept where you're at and then get better from there. Instead of a lot of them, unfortunately, they just keep on doing what they're doing. And then, that's not going to even be better for them. So tonight I have a question for you. If you could be real with, and sit down with anybody, if you could sit down and have an intimate conversation with anyone in the world, who would it be?
So I'm going to give you 2 answers. The one answer is Bruce Lee.
Ooh, nice.
Absolutely, hands down. He's been my hero since I've been probably 7 years old. And my other answer is I would love to sit down with all the adult versions of my dad, my great-grandfather, and my great-great-grandfather. So there'd be 4 adult male Pecks.
Wow.
Sitting down, and I'd like to have a talking to them.
Yeah. See how things are going.
See how it's going, but just to be able to meet those men as adults,
right,
would be just amazing.
Yeah, well, we're all our energy, so I believe that not only they're probably here with us right now, in a way.
Some level, they probably are.
Some level. Is there a book that has changed your life?
I grew up, I still am dyslexic. I didn't know I was dyslexic until my 30s. Every book my school ever had me read was a novel. I never read any of them.
Right.
The first book I ever read on my own was How to Win Friends and Influence People by Dale Carnegie when I was 19 years old.
That's a good one.
And I never knew there were things like idea books.
Right.
And I wish in school they could have given us a choice. Like, would you like an idea book or would you like to read a separate piece?
Right.
And so that's the first book I ever read. And it changed my life because I was like, oh, I mean, there's another type of book other than a novel.
Right.
And so absolutely hands down. Plus it's a great book.
Yeah. It's a timeless book, man.
It is.
It's like, just do good to others. And I mean, at the end of the day, it's all good things will happen. I mean, if you are a great person and you're spreading positivity and you're giving people good feedback about life and also accepting feedback about you. I mean, and at the end of the day, just if you're a good person to other people, I feel like that's what the world needs more of, and that's kind of what that book, I mean, obviously there's more to it, but that's always my feeling when I feel that book. I'm like, dang, that's a good one, man. I love that book.
Yeah, it's absolutely timeless.
Well, Can you give our listeners one last real talk thought?
One last thing is you're always invested at all times. So if you've been scared to conventionally start investing, just know that if there's $1 in your bank account, that you are already fully invested. So you might as well just go ahead and learn how to transfer one of those dollars over to the stock world.
That's awesome, brother. That's awesome. And where is the best place for people to find you or learn more about your services?
Yeah, thanks. So the best and only place is fearlesswealth.com. I've had that for 20 years.
That is awesome. Well, my friends, you've been hanging out with RC Peck and Travis Too Tall and Huff. I want to thank you again for your time today, and let's keep being real. What another epic episode. And if you enjoyed the episode today, can you please do me a favor and subscribe to our podcast, The Be Real Show, on iTunes or your favorite podcast platform. And also take a little time today, if you don't mind, and give your boy T Huff a review. I would really super appreciate it. And thank you so much for listening today.